Let's talk about Wall Street, where financial markets have enjoyed a strong 2025, with the Nasdaq and the S&P 500 recording highs this year, largely driven by the AI boom. In particular, the so-called Magnificent Seven tech stocks. They're all up an average of nearly 23% since January. That's a combined rise in their market capitalization, or total share value, of $3.85 trillion. Some stocks are up more than others. Of course, the chip maker Nvidia was the one that was shooting higher. Its price was up over a third by the market close on Friday. And the share price of Alphabet, which owns Google, Android and YouTube, it was up nearly 64%. In recent weeks, concerns have intensified. The sector is a bubble on financial markets, ripe for bursting as we enter a new year. So let's get some predictions, shall we? Michael Hewson joins me now, independent market analyst and Good Money Guide contributor. Morning, Michael.
Good morning, Sally. Good to see you.
So good to see you too. So where are you in the big debate about whether we're on the verge of a bubble bursting and there could be serious declines for stocks?
Yeah, I mean, I don't think there's any doubt there's certain elements of froth in a particular market. But I remember a couple of years ago when people were saying that Bitcoin was a bubble, and look where that is now. I think there will be some winners. I think there will be some losers. Certainly, I think the amounts of money that are being bandied about when it comes to OpenAI deals, $1.4 trillion, does suggest that at some point, this tech-orientated Ponzi scheme could well run out of steam. But does that mean AI is in a bubble? I think certain elements could well be. But if you look, say, for example, at the amounts of money that are being invested by the likes of Meta, Amazon, Microsoft, and Alphabet, $350 billion this year combined, um, there appears to be little appetite to rein it back. Although I would say that Meta did cut its $70 billion allocation for this year by 30%. So maybe there's a particular focus starting to return on what I would call return on investment.
And when you say that there will be winners and losers, absolutely there will be, for sure, a bit like what we saw back when the dot-com bubble burst. So who are the losers going to be? Will they be the smaller businesses, the smaller companies that have jumped on the bandwagon, many of whom we don't know who they are, what their names are, and yet they may have come to market and raised an awful lot of money on the AI enthusiasm?
I think what you need to look for, Sally, is ultimately the companies that can afford to throw money at this. So the Magnificent Seven, they can afford to throw money at it. The likes of Meta, Google, Microsoft, and Amazon. But if you look at, say, for example, companies that are having to raise an awful lot of debt to finance their infrastructure build out, I think that's where the stress points could come. And I think that's why you saw the big sell off in Oracle's share price a few weeks ago. I think there was concern when that large investor pulled out of some of their infrastructure build out. There was concern that perhaps they were leveraging their balance sheet too much. So look at the cash flow, look at where the money's being raised, and whether or not the company's concerned or either raising it by debt or by their ongoing revenues.
Okay, Michael, thank you very much indeed for that advice there. Michael
Thank you.
Hewson there with his take on the stock market, what to watch out for. Still